Welcome to NREI's Common Area Podcast. This podcast is brought to you by the award-winning editorial staff at nreionline.com. Let's jump right into this week's podcast.
Hello and welcome to the Common Area with your host, David Bodamer. Hello, David. How are you today?
I am doing all right. We are early November, lots of stuff's happening, but, hanging in there. How about you?
Yeah, lots of stuff happening at the same time, lots of stuff not happening, right?
Yeah.
That's kind of how the beginning of November is starting. But I'm pretty excited about the beginning of this podcast. I am surrounded by Davids, and we're all social distancing, of course, but you have brought David Duncan on the show today, and I'm really looking forward to your intro.
Yeah, so we have David Duncan, who's the president and CEO of First Hospitality. Hi, David.
Hey, David.
How are you?
Likewise. I am well, given the conditions. Fantastic.
That's good to hear. Before we kind of jump into some of the topical discussion, I was wondering if, for any of our audience who isn't familiar with your company, if you could just, give us a quick bio and tell us about the specialties that First Hospitality has in the hospitality sector.
Yeah, well, let me start by thanking you for having me on this. It's an honor, and I really appreciate it. My name is David Duncan. I'm the CEO of First Hospitality. We're headquartered in Chicago. My background was, the first decade was a CPA firm, a classically trained consulting business, and then the next 20 years focused entirely on real estate. And I feel very lucky and fortunate in the early aughts, just after the turn of the century, if you will, I really fell in love with the hotel business. And prior to that, I've always invested across all asset classes. And like I said, beginning in the early aughts, found just this fascinating thing called the hotel business, which for me is a great combination of real estate and the long cycle strategic decisions you make around real estate analytically. And then the branding softer side of this, the operating business called hotel, restaurant and bar and branding. And for me, it's just a wonderful combination of being able to buy or build buildings in certain spots and then bring brands to life and really make an incredible difference in that four corners and in that building. And so my post the sort of classic consulting training, spent a fair amount of time on the institutional side, investing in debt and equity, again, in the real estate, always in real estate. Today, we're 7-8 months through COVID in what is clearly one of the more crushing downturns in the hotel business. I'm sure we'll talk a little bit more about this. First Hospitality is, again, a Chicago-based firm, privately held, founded in the mid 80s, and a really strong track record of, as an investor, 20 IRRs to our investors' lifetime on all of our deals. And also we have a hotel operating company, which really is our secret sauce. We're very thoughtful about investing in real estate, focused on basis and yield and the classic things that you would think about when you're investing in the real estate side. And then we unleash what we consider our secret sauce, using investment parlance, sort of the beta, bringing really good things to life with the operating company, where we can control the operations, drive premium top lines to the hotel business, premium margins, and really get an above average return in the hotel space because of our operating company. 50 hotels total. We have an ownership interest in about half of those, privately owned, different capital structures depending on the deal. Consider ourselves very entrepreneurial and looking forward to the next 35 years of building this business and riding it through this very interesting time period.
Great. Thank you for giving us that overview. That basically, the perspective that you bring, basically because of everything you laid out, is exactly why I was interested in talking to you at this time, because as you said, we are now, I think, basically 8 months into this, to this pandemic, and hospitality has, no secret that it's been the part of the commercial real estate world, along with retail, that's been hit, just so hard because of the drops in no convention. Our company does a lot of conventions, so know firsthand what's happening with that business, cutbacks in business travel, and then leisure, and then what's happening with leisure travel. So just given, and then, and then now being in this period where we don't, it's still hard to figure out what the runway out of all this is. So given that, where do you think, where do we sit with the your portfolio, or just the hospitality sector in general? And what do you see what are your thoughts about like what the next 6 or 12 kind of months look like?
That is really a good question. When we sit here today, we don't know who the next president is going to be, and it's very unclear what the recovery looks like. And we'll look at the pundits to answer some of those questions. To put this into perspective, as you probably know, the hotel business is in its most significant downturn probably in its history. In 2020, on a national basis, the revenue, keep in mind this is a leveraged operating platform with fixed costs and revenue on top of it. The revenue in the US has been down, or will be down, around 53%. If you take 53% out of most businesses, that's doesn't take an accountant to figure out what that does to the bottom line. On a prospective basis, and I'm referring to STR, Smith Travel Research, and CBRE, 2021 is forecasted to be down about 33%. And then respectively in the next couple of years, 17% and 4%. Those are national numbers and clearly very different in certain locations. Our portfolio is doing better than that in some places and worse than that in some places. And what I mean by that is the more leisure-oriented destinations have actually done quite well. And some hotels through the summer, because of the propensity of people to get out of their home, have done exceedingly well with 100% occupancy days and weeks through the summer months. The inverse of that is really the urban core hotels, where you've seen effectively the elimination, if you will, of the business traveler. And needless to say, also the elimination of the convention business. And so the city hotels are having a little rougher go at it right now. And the more suburban destination-oriented leisure are doing a little bit better than that.
That's interesting. I think one thing I remember hearing over the summer was that hotels that were in leisure markets that were particularly accessible for like driving vacations were doing particularly well, since that kind of fit with the way that we're living. Like it's easier, maybe people are more willing to get to a car and drive to a weekend or a week away somewhere than, especially since like, traveling overseas is not really an option. But like, so people finding ways to, when they are taking vacations, to go to those kind of destinations. So therefore the hotels that are serving those markets were the ones that were kind of doing better. Is that sort of holding true through what we're going to see in like through the winter months?
Yeah, I believe so. And so I think this past is, as you mentioned, a reflection of many listeners' life, which is, I really would like to get away. I may be hesitant to get on an airplane. And so therefore, what can I do for myself, for my family, and really get away? And for most people in the US, that has, they've concluded, stay in the car, stay safe, control my environment. And therefore the drive-to markets are, been absolutely the winner on a relative basis during the past 7 or 8 months. The further flung, if you will, destination hotels have really been hit hard, with, in some instances, airlift being eliminated for all practical purposes. And so that's sort of what's happened to date. The good news is, going into the third and fourth quarter in our business, we've seen some upticks in business travel, albeit minor. But what I've actually observed in our numbers, and then in talking with investors and friends, is the propensity of individuals, especially business folks, to travel has been exceedingly low, hesitant due to, I'll call it fear, hesitation, whatever you want to attribute that to. But as people have actually ventured out and understood that if you're careful and do this very responsibly, you can actually travel on an adjusted schedule basis. And the folks that have sort of hit the road, we've observed, are much more comfortable and understand it's actually not nearly as scary out there in the world beyond your front door as some people had imagined. And a hotel space, the protections that have been put in place to protect our guests and our associates are actually exceedingly high level of standards. We were one of the first companies to roll out what we called Hospitality First, which was a program to just make sure we were keeping social distances, masks in place, sanitation procedures, at very high levels of standards, keyless entry wherever possible, touchless things wherever possible. And we've really benefited from that. As once folks have begun to come out, we see that there's an uptick. I don't want to exaggerate that. That has been a trickle of an uptick. In some instances, we're still 40, 50% off of last year, but sort of heading in the right direction. And so what does that look like going forward through the winter and in the next couple of years? In our business, again, back to my sort of fascination with it, which is we think about these businesses in two ways: 2 and 3 and 5 year trends from an owner of real estate perspective, and then on a very short term operating business. What can we do tonight, tomorrow, this weekend to attract food and beverage enthusiasts and transient travelers? We anticipate a very slow recovery into 21 and ditto through 22. And we believe it's really entirely contingent on vaccinations and other protective measures that science will deliver, we believe. And so what's really interesting, if you read and follow any of the public REITs in our own portfolio, the visibility, the amount of business that you have on the books, and most of our hotels, I can tell you 6 months out, this is sort of what it looks like. As a result of COVID and the hesitation to travel, the booking window in the hotel business right now can be as short as a week or a day. And we've actually experienced, weekend pickups in the day for the day. You drive, all of a sudden double the occupancy as it's sunny and people are tired of being home and they want to get out, or they think they can hold that meeting and people rally, albeit at the last minute. And so it's been interesting on the operating side of the business to shift the model. How do you make sure on a staffing basis that you're flexible and agile to accommodate sometimes very low levels of occupancy and demand, but being ready and having a team that's flexible to accommodate surprisingly high levels, albeit on a last minute basis. And so the choppiness of it is interesting. But back to the main theme, we believe 21 will be sort of a tough market with respect to operations. But with all things, and we especially believe this as an investor, with all challenges come great opportunities. And that's what we're really focused on as a real estate investor and deploying equity. And we believe there will be incredible buying opportunities. Not sure exactly when that spigot goes on, right? And so we're optimistic, prepared to take advantage of being able to acquire, build, and do things at, we believe, potentially investment bases lower than for sure historical or actual cost, recent historic costs, but perhaps much lower investment basis on a go-forward basis than has been available over the past few years. And so on the operating side, on the investment side, I should say, we're really leaning into what we think will be incredible buying opportunities, and happy that we have this operating company as sort of our captive to make sure we understand the difference between what's good and what's just cheap. And in the hotel business, there are a lot of things that we believe will be cheap, but that doesn't necessarily translate to good investments. And we'll rely on our operating experience to try to differentiate there.
Another trend that I've heard about recently is the concept of some people wanting to use a hotel room basically as an office, essentially, like to get out of, maybe they're working from home, their corporate office isn't open, or maybe they just don't want to travel there, but there's a nearby hotel and they could just get essentially a desk and maybe even a bed for the night if they really want to focus. Are you seeing that kind of usage at your properties?
We are. We call it WFH, not work from home, but work from hotel.
Yeah.
Right. And so we are seeing that it's an opportunity, sort of as a percentage of the business, relatively small,
Mhm.
but what, in this sort of revenue cycle where the former, high level flows of revenue have in some places, come down to a trickle. Every little bit helps, right? Every little trickle helps. And so we're seeing the opportunities on the short term is to emphasize the transient customer in all forms. Work from the hotel, set you up in that way. Leisure, weekend traveler, get away from your home with your kids or friends. And then what's also a big focus on a very, very short term basis is making sure we're leaning into creative uses, alternative uses on a short term basis for hotels. We have hotels adjacent to universities, opportunities there, and in some places urban core, which were in certain instances, we didn't do much of this, but respite places for folks that were at risk of
Mhm.
COVID, and then also first responders. And we actually saw an incredible demand from first responders that we offered, and we effectively operate the majority of our hotels under the major brands,
Right.
Hilton, Marriott, Hyatt, etc., and really appreciated their thoughtfulness rolling out these first responder rates. And so if you are a first responder working in a hospital or fire department or whatever, that you have an incredibly good rate, should I say, effective rate, that you actually can, stay in the hotel overnight and get the rest that you need to go back to that job. And it's one of the things that I really have appreciated during this time is the culture of our team. And while one could say, geez, these are probably the worst times in the hotel business, financially, one could argue that's true. On the other side of that, the opportunity to use our hotels for good
Mhm.
has been amazing, and an opportunity that really buoys our team's spirit, right? If you can, rent a room at a low rate to a first responder and know you're really helping in the community and protect people and really foster the recovery of people's lives, that's a really meaningful extension of our hotels and the hotel business that we've really appreciated. Clearly, it's provided some revenue during this time period, which is especially appreciated. Probably more important, it's one of those really neat things about the hotel business that the folks that work in these hotels are reminded every day what a beautiful opportunity it is to connect with people. And I think that's been a wonderful opportunity to use hotels for good.
Yeah, I think that's been a great story amid this tough time to like see how hotel space have been able to do that. I remember I'm in Brooklyn, so like the depths of those dark days of the spring when things were so bad here, but then hotels across the city that stepped up to offer those kind of spaces, both for in cases of people that were COVID positive but weren't necessarily symptomatic or whatever, just a place where they could stay safely, or for first responders who were coming from out of town to help us at that time since there was such the demand, or even just for people that lived in the city but were afraid of maybe going home every night and just having a peace of mind about not potentially exposing their family and just being able to go to the hotels near their hospitals. All of that, I think, it felt very like it was a good thing that was happening amid those dark days.
Yeah, no, amid the chaos, the shelter in the storm, we sort of think of
Yeah,
it as, right?
yeah. One other question on the property level is just amid this whole period, is there a difference in terms of like the emphasis or just the types of amenities that you're looking at properties, like stuff that's maybe more important or less important now, just given this whole thing?
Yeah, and so so inside of the four walls, if you will, of the hotel, the some things you previously thought of as a wonderful amenity may be perceived differently, and other opportunities which are underutilized is now an amazing opportunity. I'll give you a couple of examples. Indoor pools at,
Hmm.
at transient oriented, leisure oriented places. It's as a child going, traveling across the country and literally in the back seat of the proverbial family station wagon. I remember we couldn't wait to get to the Holiday Inn on the side of the highway so we could go swim in the pool, right? And that was a long time ago. And by the way, it was Holiday Inns on the side of the highway. Today, that still exists for kids, right? When my kids were young, we would go well out of our way to get just a hotel room with a pool was a beautiful amenity to keep the kids occupied, excited, energized, exhaust them. And that still is true. However, in this era of COVID, people aren't necessarily so excited about going in a warm, somewhat humid room, right? And so, all of a sudden something that was really a neat amenity is like, oh, geez, not going there now until that gets fixed. On the other side, in those same hotels, we have interesting restaurants and bars and opportunity to expand onto the street, opportunity to expand dining outside and converting, that little strip of outdoor tables, which may have been appropriate or maybe restricted because of zoning conditions as to how much outdoor space there is. Some of those spaces, with the city and municipalities being very supportive of expanding outdoor dining, also became wonderful opportunities. And as we go into the winter months, one of the things we're doing in some of our hotels, as an example, we have a Renaissance Hotel in Toledo or a Hilton Garden Inn in Louisville with rooftop bars, which are, terrific amenities 3 seasons out of the year. We're putting these igloos in. You may have seen some of these.
Yeah.
As just wonderful places, respites, if you will, for small groups to be able to still stay outside, get some fresh air, but feel like they're living in a special space for a little bit of time. And so you sort of utilize, I think the lesson is utilize the whole envelope, be agile on the spaces, and be thoughtful about what's really important to the customer, which is A, safety, and B, to the extent you can provide them the ability to get outside and still spend time with their family, exceedingly positive.
So switching gears, so we're talking about all, this is what you've been operating through, and some of the bright spots, some of the challenges. What's the experience been like to communicate with your investors? Helping, just given the uncertainty and maybe questions or concerns that they've had. What has that process been like? Just talking, like how often, what forms of communication do you have with your stakeholders on a regular basis, like through this time?
Yeah, good. That's a good question because it's such a challenge during this environment. And so on the investors, sort of fundamentally, my ongoing sentiment, I feel like during this time is I've never worked harder. I'm not doing nearly enough. I feel like we're not spending enough time with the right groups. Yet that's all we're doing is spending time with these groups. And so it's this really interesting paradox of how do you manage that expectation, communication, and just the fundamental, how do you stay connected? One of the things that I really enjoy about this business is we have investors that are friends or that have become friends because they're investors. And, there's this interesting connection with them. Fundamentally, when you break it down to its, the commercial parts, they're expecting a distribution. Mm-hmm. One of the reasons we've been so successful is we build hotels to make owner distributions on a monthly or quarterly basis. And, they've been opening that check for, months and sometimes years and decades in our instance. With COVID, all of a sudden that sort of that spigot got shut off as we were, augmenting liquidity, focusing on liquidity to manage through the downturn. But the conversations that we had with our investors they clearly understand at the headline news level what's going on, tried to communicate to them what we're doing on the ground on a micro level basis to reduce operating costs and to drive unique revenue opportunities, et cetera. And all true. And I do think that our team is doing we're gaining share, we're gaining market share, which in isolation is a really wonderful thing. However, if you're not making distributions, or more importantly and more likely, you may be asking them for more capital,
right,
to provide capital to ride it out through these what we call forbearance periods, right?
Mm-hmm.
And so sort of this conversation goes from I'm sending you money to, hey, maybe you send me money. and it's some of the worst times ever. And how do you maintain their confidence? And you do that by telling them everything you know as proactively and as clearly as you can. And one of the observations that we have is that old adage, bad news is like fish and doesn't age well. We're trying to be really explicit and transparent with what's going on and providing again, we're a private company, but with this investor constituency of providing them forecasts, 2 years out, and more importantly, explaining what the assumptions are and why that's the case, and some of the variability and volatility, which is going back to the most recent steps, are supporting the hotels with additional owner infusions to provide forbearance where needed. And on the similar, but sort of one swim lane over, is similar conversations with lenders.
Mhm.
And I've spent a lot of time in my younger days as a consultant doing workouts and bankruptcies of most major developers across the country in the early 90s, and observed that and participated either as a lender through early into the early aughts, as I call them. And what we believe to be true and the way we deal with our lenders are same principle: be exceedingly transparent, do what you can, tell them what you can't do, if you can raise capital, terrific. If you can't, explain the circumstances, and most importantly, be the best athlete for that asset. And what I mean by that is, and when I spent a lot of time at GE Capital, when you're on the other side and you say, okay, it's a problem, is the team running that the best one to protect my collateral? And if the answer is no, the workout scenario is completely different, right?
Mhm.
It's just like, you want to get them out and you want to replace them and you want to move on. If the answer is yes, the tenor of the conversation really is different, which is okay. Maybe now it's more of a collaboration. Yes, I want to protect my collateral, but you are absolutely, we believe we are the better, as I call it, corporate athlete to run the property. And that's actually helped us quite a bit, I think, during this downturn. Lenders still want to get paid back, but they're more, a little more understanding, I would say.
Right. Yeah, in this environment, and it sounds like from what you said earlier that you're also are looking out there for whenever the spigot does open, some of these opportunities to strike on assets that could be real growth opportunities going forward.
Yeah, no, I think it's a very unique time in the hotel business in that most capital structures, for probably the first time in my life, followed a very similar rhythm. And what I mean by that is early COVID, most every owner of real estate applied for PPP loans,
Right.
and similarly turned to their lender, be it a bank or a non-bank lender, and said, give me a little help, give me a little daylight and forbearance. And most, the answer generally was the PPP loans were a mathematical equation, which actually then put everybody on the same track. You
Mhm.
raised about enough money to get you through 3 or 4 months, right? And then the lender forbearance, similarly, it was been an OT of a regulated bank, maybe up to 180 days. But all of a sudden, it was like everybody started this new race is the wrong term, but effort at the same time. PPP loans burned off in a certain time,
Mhm.
180 days expired. And so what's been interesting during this time is because of this combination of what I'll call fiscal stimulus in a very general way, has really buffeted the economic realities of the hotel business over the last 6 or 8 months. Our perception is that PPP loans have been spent. Lenders are sort of, they gave you 180 days. And we believe sort of going forward, those likely will cascade into a much higher level of, I'll call it, unplanned sales or forced sales of assets. And that's really what we're not looking forward to the misery of that. We're
Right.
looking forward to take advantage and help people where we can. And I think what we've observed in past downturns, if you study the hotel business and the revenue recovery curve, it's very interesting in that this is intuitive once you think about it, but it's counterintuitive when you first hear it. The recovery of value through these downturns actually happens more quickly than the recovery of revenue. And so
Interesting.
if it takes, making up the example, if it takes 5 years to get back to peak revenue, it's often the asset valuation recovers sooner than that. And that's surprising when you look at the data, but it's actually not surprising when you really think about it. The stock market trades in the same way, right? The stock market trades and most investments trade on a basis of forward earnings.
Right.
And so it's really interesting in talking with investors today, which is, gee, it's probably going to be until 2023 per the pundits until we get back to normal. I think that's what the pundits say, and if that is in fact the case, now is the time to be prepared to buy assets, because by 22, making up these numbers sort of as generalizations, the ability to buy assets at a discount may be behind you.
Yeah, but it also seems like, even amid all this, there's a lot of capital. I think almost instantly once this all started, people start talking about distress within weeks, and then I've seen so many get press releases about debt funds, mezzanine funds, equity funds, all with an eye on that. So it does seem like there is an array of capital because that's always just seemed to me like the way the real estate cycle works. And it's clear, it's obviously a painful process for the person, for the entity that's got the distressed asset, but that's how the new cycles always begin, is somebody being able to take a property that doesn't work out because of what the price was when they bought it, but someone else can come in and buy it at a lower, if they have a good cost of capital, if they've got a good operating team. That's how we start the growth cycles again.
Yeah, no, chaos provides that opportunity. But you're right. The amount of capital that has been raised to take advantage of or to provide liquidity to this business is mind-numbing. And I think what'll be fascinating will be how that capital behaves.
Yeah.
And how quickly does it buoy assets beyond that bargain price? Right now, there's so few trades to identify what market value is during this environment. Most folks that have looked at that and are the proverbial cover bid think the guy who bought it overpaid, but there are very limited numbers of transactions there. But I think it's getting to be relatively soon that the volume of that will begin to occur. And back to the thesis that the asset values will recover more quickly than the revenue curve, you'd be well advised to be thoughtful about getting your team together, investing, getting your capital together, and starting to look at opportunities, because if you're slow, you'll miss it, right? If you bought assets in 2016, it may have worked out for you. Probably worked out fundamentally a lot better if you bought it in 2014.
Right. So we've been talking for a while. I'll do one more question before we kind of wrap this up, which is, I understand that First Hospitality recently formed a diversity and inclusion advisory council. So I was wondering if you could talk a bit about that in terms of the importance for First Hospitality, but also even maybe in the industry in general. I mean, we've been talking about COVID and real estate, but this year we've also had a very large conversation about diversity and inclusion, and that's kind of cross industries. And I've talked to several guests about that. So, would be curious to hear, since that's something that your company is now looking at too.
Yeah, no, and I would characterize our culture as always welcoming diversity and inclusion. And so we formed this council to, make sure we're focusing in the right areas. And backing up a little bit, I think the challenge in life today is bringing people together. I want to philosophize, if you will, about the divide, if you will, in the country. But in the hotel business, one of the gifts, if you will, or wonderful opportunities are a large majority of our hotel staff are at some level indexed to minimum wage. They're above minimum wage, don't get me wrong, but sort of a large population, our housekeepers, et cetera, are in, sort of in that wage earning environment. And what I think is fascinating, and one of the things I've just loved about the business, is seeing people grow into their roles and what it does for them personally as they establish their family move to a different neighborhood, sort of move to a different economic opportunity place. It's really compelling. You see a few of those examples, and it's just a natural answer of yes when you can lean into that. And so what is motivating our diversity and inclusion efforts, or more importantly, what we're really working on, is really what I call the I part, the inclusive part. And it's easy to bring together a diverse crew, right? But if they don't really thrive, if they can't show up as their authentic self at work, and if they can't be an advocate for you as an employer to their friends, I don't think you're there yet. And that's really what our team is focused on. People generally have good hearts in our world, in our impression. Sometimes the way they communicate, they may not be conscious of it, the old unconscious bias thing. And they may just not be comfortable to ask that that question or have that conversation. And we're trying to make sure that people know that these conversations and this is the way we want to treat people, treat people the way you'd like to be treated. I think people fundamentally believe that. Helping them to understand how to do that and to manage through those difficult, conversations and periods is really what we're focused on internally, with the overarching objective of being an employer of choice, welcoming a larger crowd of, beyond what we've historically been able to do. And the team is so excited to be able to provide people unique opportunities because, as I've said to our team, if we can do this right and even better than we have in the past, not only do you make it a better place to work, but you really have a unique opportunity to make someone's life better. And that can cascade on a generational basis. And amidst the crisis of COVID and the civil unrest and all the terrible things that we've seen recently, the examples of people opening their arms and helping other folks and leaning into D&I and being allowed to be their more authentic self at work, to me is just a generational opportunity for us. And so that was really the reason we put together the D&I Council, and that's really some of the focus.
Well, I want to thank you so much for being so frank and giving us a lot to think about and a lot for folks to process. But I very much enjoyed getting to talk to you.
Yeah, likewise. Thank you for the opportunity. And it's really nice to be able to zoom back and have these sorts of conversations. So I really enjoyed it. I appreciate it. And thank you very much.
How can people get more information?
My name is David Duncan at First Hospitality in Chicago. Email address is DUNCAN at firsthospitality, all one word, .com. With the prevalence of Google, I'm sure you can find me there. Again, really appreciate the opportunity today. And thanks for the time.
Gentlemen, this was a fantastic podcast. David Bodamer, thank you so much for bringing David Duncan on. I just sat back and I learned a ton, because I don't think you've had someone like this on the podcast before. So I really enjoyed it. Thank you so much for bringing him on.
Sure. Yeah. No, it was a great conversation.
Yeah, absolutely. And of course, the last thank you goes to you, the listening audience. Thank you for tuning in and listening to the Common Area Podcast with David Bodamer. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when David comes out with a new podcast, it'll show up directly on your listening device. This makes it even easier to share these podcasts with your colleagues. Again, thanks for listening today. For everyone at NREI, this is Eric Johnson inviting you back in 2 weeks for all the stories that matter to you. We'll talk to you soon.
Thank you for listening to the Common Area Podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guests and does not necessarily represent the views or opinions of NREI or Informa. The content has been made available for information and educational purposes only.